What's going on, everyone, and welcome back to Stock Watch, the series where we watch stocks and stocks watch us. And today, I'm very excited for this update. It's been 1 month since I've held shares of VGT, and today is a good day for VGT. It's gone up 44%, or not 44%, that'd be amazing, but it's up 0.44%. So basically, I'm just going to show you real quick my history with VGT. I bought my first share on November 19th for $234.28. As you can see, it's December 19th. So 1 month after owning VGT, and I've bought so many shares just because I've seen just how quick it can grow. So I actually got a dividend today as well. So my dividend was of $6.51, but unfortunately, it only counted 10 shares. So I was only able to buy 10 shares at the ex-dividend date. So I was only given a dividend for 10 of the shares, when in reality I own 13 shares. So let me go up. I'm owning 13 shares of VGT now, when 1 month ago I only owned 1. So this is actually my biggest position in my portfolio. And honestly, like, if I could only invest in one stock, I would invest it all in VGT, just because of how reliable and fast it grows. And that's actually where a lot of my money is going to continue to go into. Like, I'm going to buy for sure one VGT stock a month, and if I don't have the money to buy any other shares, whether it's Uber, Google, or whichever other stock that I really like, VGT takes priority, just because, again, it's like, I love how the tech sector, it's volatile. I'm sorry, that's an ambulance. The tech sector is volatile, so it goes up pretty fast, but it can also go down pretty fast. But since it's an ETF, it kind of protects against that volatility. So looking at the 1 year progress, you can take a look at how much it's grown, over 40%. 5 years has grown over 130%, and the graph is pretty consistent going upwards. You have this dip in December of 2018, but that's something that happened in the overall stock market. So it's not something that just happened with VGT. So if I show you with the S&P 500, December, oh no, it's the 2018. So it's back over here. December, oh wait, it's all the way back over here. Yeah, so you see they had a dip too. No, 5 years. I should have shown you there because it's easier to show. But they also had a sizable dip. So again, I just really love this ETF. I currently hold 13 shares when I held 1. It makes up around 32.5% of my portfolio, which is a rather large chunk of it. And today I've made $14.47, and it's still been climbing up. So in the time that I've made this video, like, it's gone up a couple more cents. So currently up $14.56 for a total return of $83.03. And it's only at 2.72% return. I recently bought a decent chunk of shares, not chairs. So that's why they haven't had enough time to grow. So let me see. I bought 4 shares December 16th, so 3 days ago. So those shares haven't really had enough time to grow. But with time and days like these, like, that'll be reflected in the total return. But it's still one of the stocks, and I think it's actually the stock with the biggest total return. And it's just been performing really well for me across the past month of owning it. And it just keeps climbing. Now it's at 120. So I really love this stock, and it's my favorite by far. Like, I love it more than Uber, than the S&P 500. It's just the best in my opinion. So going over just a little bit, I already touched on how it's a tech ETF, so it has that volatility. Oh my god, I can't speak today. The volatility of tech stocks, but it has the protection of an ETF. So it makes up for the weaknesses in that sense. And it's also one of my biggest gainers. And the days that it does go down, it doesn't go down that much. So in the past week, we had this big rally right here, and I think one's coming pretty soon. So that's why I bought a couple more shares a couple days ago. And it's just a really strong ETF. I did want to compare VGT to the S&P 500, just because they're both Vanguard ETFs that are very reliable and give you good return on your money. but kind of explain more why I prefer VGT over VOO. So in terms of the 1 year growth difference, if you look at VGT, it's around 42%, and the S&P 500 is at about 26%. So although 26% is really great, and that's why I'm invested in the S&P 500, like it still has really good returns. VGT just has not double, but it's ahead by, let's see, 15% in terms of return. So that's why I have most of my money, 13 shares in VGT and only 2 shares of the S&P 500. I do want to build up my VOO position, but whenever I have the money, I always end up putting in VGT just because it looks more appealing. So that's the 1 year growth difference. In terms of dividends, the S&P 500 pays a 1.85 dividend, and VGT pays 1.13. So the difference right here, it goes to the S&P 500, but it's not that large of a difference. It's 0.7% roughly, and I think the S&P 500, that means you get $1.25 around that vicinity, and then for VGT we got 0.65, 65 cents. So although it does make a difference, also keep in mind you're paying more for the S&P 500, so that kind of makes up for that price difference. Regardless, like they both pay a dividend, which is great, but there isn't that big of a difference in terms of dividends for me to want to say, oh, I want to put my money in the S&P 500. Next is the expense ratio. So for people who don't know, ETFs have expense ratios. So basically you're paying Vanguard a certain amount of your money so that you're able to use their ETF, because ETFs aren't free, because ETFs are a list of stocks that get updated, and if some stock is no longer like a top company, then they get kicked out of their list and they reinvest it. So it's a whole process that you don't have to worry about. It's all automated and taken care of by Vanguard, but it's not free. So that's what the expense ratio is. For VOO, the expense ratio is 0.01%. So you don't pay much. Like that's why I love Vanguard. Like their expense ratios are really low. For VGT, it's 0.1%. So you are paying 10 times more, but 0.1% is still not that much to pay in terms of for the expense ratio. So when I look into the 1 year growth chart for VOO and VGT, because of how much faster VGT grows, I'm willing to pay that higher expense ratio. And lastly, looking at the difference in cost, VGT is $241 at the moment, and VOO is $294. So it's like a $50 price difference. And for what you get in VGT, I feel like VGT is easier to get into. Like it's easier to drop $240 on a good solid ETF than it is to drop almost $300 on another solid ETF. And for something that gives you so much in terms of return, that's why my money has been going to VGT, and it's my favorite. It's still going up today. If you look at total return, now I'm up almost $85 or $16 on the day. And it's just been a really solid stock for me in the past month. And I might jump over to show you all what holdings it has, just so you get a little understanding of what is in VGT. So I'm on Vanguard's website right now. So you see up there, investor.vanguard.com. And just to show you all that this is Vanguard Information Technology ETF, or VGT. You can look up, this is where I see the expense ratio. You see it's 0.10%. It's in the technology sector. And it gives you all, like, a lot of, like, useful information. Going down to the top holdings of this ETF, 56% of the ETF is comprised of Apple shares, Microsoft, Visa, MasterCard, Intel, Cisco, Adobe, Salesforce, Oracle, and Accenture. So these are all very solid top companies, and like I said, these get updated. So if, let's say, Apple has a crash and they find out something terrible, then they're going to kick Apple off of their holding and they're going to replace it with another company that they deem solid. and they have the whole process for all this, and it gets updated. That's why ETFs are so reliable. It's not like you're stuck in investing on these companies. They'll take care of all that, but for that you do have to pay that 0.10% expense ratio, which I think is worth it. So this is really all I have to touch on for VGT. It's probably going to be a longer video just because I love the stock so much and I have so much to say about it. But hopefully you liked it and watched till the end and learned something from it. And I hope you all have really good luck with the next couple days as the year comes to an end in your investments. I hope you have a wonderful day.